welcome to the Island Wealth. This is Rooney Calmera, and today I will go with the episode number 3. If you want to know more about United States, BRICS, and if you want to know more about how strong the United States exports are compared to the BRICS, to Europe, to the G7, this is your episode. I have been doing this for this week already, and this is the 3rd episode. Like I promised you, I'm an economist. Why would you wanna listen to me? I'm an economist with 30 years of experience. I'm based in Curacao, the Caribbean, and I've created macroeconomic models for 12 islands already, and I have advised countries in Africa like Namibia, Kenya, many other countries, and basically I can advise them because I know how to create economic models to analyze the economies, and I'm building an economic model for United States. So if you want to know so let's move and continue to this with the discussion we had. We had a discussion where we just analyzed the global, what is happening in the world with the BRICS. And today, I want to go a little bit deeper. I want to show you some data that is going to interest you. This data is basically the export data. What is exports? Exports is how much do you sell to the world. United States sells, the business in the United States, they sell to the United States citizens, but they also sell to the world. And when you sell to the world, your economy and your businesses will be stronger, and there is money circulating. There are people, you become wealthier if you can export. Small islands in the Caribbean, for instance, they depend for a considerable part on the exports, and they export to the tourism services to, for instance, USA. That means if you are a USA citizen and you travel to the Caribbean, to the beautiful Caribbean with a cruise or with an airplane, then those are exports of tourism services, because an island like Aruba, who's completely focused on the United States, will sell you these experiences, the tourism services. But the United States exports other products. China exports other products. The BRICS export other products. So if you want to compare the economies, the exporting, how much are they exporting with each other, you need to look at the data. Okay, let me just show you where we ended last time, which is a spreadsheet. And this spreadsheet is a macroeconomic model of Curacao, and we run already a scenario with this macroeconomic model. Check the previous episodes where I showed you exactly if, for instance, United States increases tariffs on the imports 25%, what can happen with the United States itself. it will go into a recession, the prices will go up. Look at the episode exactly where I show that exactly. Now, this is a macroeconomic model, so you see all these figures from Curacao, and you see them also for the future, and you can run a simulation. This is basically what we're going to build during 16 weeks. And if you want to participate in that experience, not only building it, understanding the data, and then also using it. What is this about? This is not only about the technical model, it is about your wealth, island wealth, your wealth if you're living in the United States, your wealth if you're living in Europe, your wealth if you're living in China. All these things happening, how does it affect your net worth? You may be having savings on the banks, you might be having stocks, you might be even having Bitcoin. The people on Nostr watching this episode, you might be having Bitcoin sats. What's going to happen with your wealth? That's what island wealth is about. So all these indicators, great. But you tell me, Rooney, how can we check the other indicators? What are the indicators you're talking about, Rooney? Now, let me show you here. I'm sharing my screen here again. Let me see. Sharing my screen. And I'm looking at this thing. So what is this? In here, you see a framework, which is a data science framework. It is a framework. We are not in Excel anymore for the people. We are in a data science framework. That means this is a programming framework where I can program everything. Now, this is going to be episode, the global indicators of the BRICS, USA, G7, Europe, and the Caribbean. I'm going to show you how this thing works. I'm going to show you the data, and I'm going to analyze the data and show it to you step by step. Okay? So, what is this? You already saw bit.ly/USA-macro-investment-model. That's for the 16-week experience. And I can tell you, okay, great. These are data, and what you do is actually you import data. You import data, and I'm importing data about the export. So this is an Excel spreadsheet in here, and I'm just creating something, and I'm creating a formula, and I'm importing that data. Once I import that data, what do you see here? Because then I'm going to show you this data, and this data is export data of all the countries: Australia, world, advanced economy, Euro, Austria, all the countries, and it is per month. You see that? It's all those countries in the world, and then these are export data. I can check Belgium. You see here? I can pick up Belgium, and that means that this is export data of Belgium from 2014 onwards. Now, where do I get this data? I get this data from the IMF, the International Monetary Fund, that has all these export data, financial data, and everything from all the countries in the world. And we're going to use this because we're going to select the BRICS, then we're going to select United States also, and then we're going to select the China, then we're going to select Europe, and then compare these data with each other. You understand? So modern things, we don't work anymore in Excel. We use all the data we have, and we are working with Python. This is Python. I have a Python course where I teach you exactly how this works, but I just want to show you right here for the people on LinkedIn, for the people on YouTube, on Facebook, and also the people on Noster. I want to show you what is possible, how this works. You are right here in my office and I'm showing you exactly what's happening. So you can also be doing this if you have this Python framework. You can be doing this. So I'm going to show you a graph. So I created a graph just with this is the Python code, and I just created a graph of Qatar, Saudi Arabia. You see here, Saudi Arabia is the exports is in orange. It's about 12 billion US dollars, and it went up. And Qatar is basically flat, around 2, maybe 3. These numbers are the numbers till 2022, but I can update this instantly by importing the latest figure from till 2024, and then you will see this data. Boom, the spreadsheet is there. So that's how we do it. We don't work in Excel anymore. We don't do all the manual stuff. We are advanced, and we are using automation to do this, to create this information. So now let's move. So every cell here, every time you are here, you can just do some calculation. Let me just show you. I can show a calculation here that you say this is not. I can just type 1 plus 1. And then you see it's 2. I can tell print. I can say print. Thanks for watching this episode of Island Wealth. And then when you print it, you see that on the screen. So that's the automation, you see? Okay, now let me look at the countries. What are the countries that we have in this database? We have all these countries: Australia, Ireland. You see here? Luxembourg. Luxembourg is a very, very rich country. We have Japan. So I'm talking about all these possible countries in the world. India is part of the BRICS. China is part of the BRICS. Bhutan, for the people who are watching, Bhutan is having Bitcoin. So we can be analyzing the economy of Bhutan, the exports of Bhutan. We will do that another time. All the Caribbean islands are in here. Tuvalu, small island economies. You see, so this is all the data. And I'm just getting that data out of the spreadsheet. I upload it, and the spreadsheet has all this information in it. So let's continue. Now, we want to check Brazil, right? We want to check the BRICS, and we are defining here the BRICS, and we are defining the exports. So we are defining a variable which is the BRICS, and then it's a data frame. We're defining the exports, and we're taking just BRICS, Brazil, India, Republic of China, South Africa, United Arab Emirates. We are putting all these countries, Ethiopia, Russia, the Federal Republic of Iran. This is Ethiopia. It's also Federal Democratic Republic. Iran, Egypt, Russian Federation. So what we're doing here is we are going into the Excel spreadsheet without opening it actually, and we are extracting, singling out only these countries which are part of the BRICS. Now, to tell you, I had to update this list recently because now United Arab Emirates is also part. And then you have Egypt is also part of the BRICS. I heard that Indonesia is also part, but I didn't put Indonesia in there. But in a future episode, you will see that I add Indonesia also. We can also be having all the other countries. Now there are 9 countries, but we can be updating it, and then we will get a better graph, because the graph will then be dynamically containing those countries in there. So the more countries are associated to the BRICS, the better we can increase this. So if we get this, you see here all these BRICS countries are in our data. And now we define a total, which is the total of all the BRICS. So we define the total, which is just the total of the BRICS, and then we add all those together. Boom. And now let's look at the BRICS. You see here? Now I see that these are all the, what is this? This is the export of Brazil, the export of India from 2014, first month, till 2022. You see here? Then we have all these other countries, United Arab, we have the exports of them all. Okay, this is a million. So these are the exports of the BRICS. Now, I want to create a graph. I want to create a graph of the BRICS. Let me see if I can put this a little bit there. And I just want to create a graph where I say, okay guys, I want to create a graph where I say, hey, okay guys, let me actually, let me see. Let me actually draw this thing. So what I'm doing here is I'm just putting like all these countries in there, and I'm creating a Y. If you know more about graph, you have an X axis of the years or the months, and you have a Y axis with the indicator. In this case, the indicator is the exports, and I'm just putting all these exports, and I'm dividing by 1,000 here for all these variables. And then I'm putting here the BRICS in there, and I'm putting also the exports of the United States and the exports of Europe. You see that? So in my graph, you will see all the BRICS, and then you will see also the Europe, and you can compare them to each other. Boom. So look at this. This is the total BRICS, which is blue. You see United Nations, which is orange, and you see Europe, the exports of Europe. So what do you see here? Let me see. What do you see here? Let me put it a little bit there. Let me see. Whoop. Yeah, what do you see here? What do you see here? What do you see in the top? So basically, you see that? Basically, we put this. Basically, you see the total of the United States, orange, is below the BRICS. Below the BRICS. And it is about 300. So United States is around 350. About 350 billion in exports. No, this was United States, the orange one. This is the BRICS, 350. Blue, already more than the United States, 350. And the United States about 250. It has grown, both have grown, but the BRICS was close to the United States, and then the BRICS went up. So what is this telling you? This is telling you that the BRICS combined, those 9 countries, they have more export than the United States. That's what it's telling you. They have more exports than the United States. So that means that you need to pay attention to the BRICS. You need to pay attention to the BRICS because they have more exports than you. They have more power than you. You see that? With you, I mean the United States. Europe is basically bigger, but Europe, I think there are 20 plus countries in Europe. So Europe is much bigger, but the United States have 50 states, and those BRICS countries, they have more exports than Europe, than you, United States. Okay? So let's give an applause of that. Let's have an applause of that. So we already saw this, and this is telling me that we need to pay attention to the BRICS, people. We need to pay attention, meaning that, hey, how is this going to affect the world? They are exporting more. Let me put this into perspective. They are exporting more. They have other ways to export. So if the United States wants to tax them, they have other ways to diversify their economy. Okay? They have other ways to move away from the United States, maybe trade with each other. And around these 9 BRICS nations, there are more nations that are affiliated to the BRICS. Okay? So, pay attention. Pay attention. Let me put it again. Pay attention to this graph. This graph tells you what is happening. Okay, so let me continue. Let me continue now. Let me continue. So the next thing we can do is we can check the global exporters like Germany and China. You see here? So the same thing, I put the global exporter, Germany and China. The green one is Japan. Japan is exporting about, let's say, about 60 billion. Then we take this away, this applause away, move it there. Then we have Germany. Germany is a huge exporter in Europe. I studied in the Netherlands, and in the Netherlands they used to check and watch the German economy, because the German economy, if it goes up, the Netherlands also trades with Germany, and then they are huge in export. You see here? So Germany is about 125 billion, because I'm looking at the x-axis, 125 billion about. Then we have China. So if you move to China, China is already larger than Germany. What does this tell you? What does this tell you? This tells you that China is about 175 billion exporting. Think about that. Germany, one of the best exporters of Europe, and then China is bigger exporter than Germany. If you export more, that means that you have more money coming in, because you don't only sell to your local people, you sell outside China, and you are selling to the world. You are trading with the world. This means that China is really, really not small. We have to pay attention. This is a rising star. This is the next leader of the world, because they are already farther exporting more than Germany. Okay, then you have, of course, United States. But look at the figure. United States has, of course, about 250 billion, and China already got the 200 billion. So there is only, I think, let's say, that's about 50 billion difference. And if there is a contraction in the United States economy, because Trump, Mr. Trump, is putting taxes and tariffs on other people, other countries, like we saw in a previous episode. Check that episode where you see how they can bounce back and create a recession in the United States, leading to maybe the Fed coming in and decreasing the interest rates, more liquidity, more money coming in, because you have to print more, and then the consequences potentially on the Bitcoin price. This is for the Bitcoin people on Oster. This means that they are continue to export, and it's close to the United States. Good. So now we have seen that. We can continue, and then we can check the BRICS versus the G7. So the same thing I did is I define now the G7, which is, okay, United States, Japan, Canada, United Kingdom, France, and Italy. The same as I defined the BRICS, now I define the G7. And then I get from the same Excel spreadsheet, if you want to know how this is done, if you want to know exactly how I do this, you need to follow my Python program. Just click on the link on LinkedIn below and say Python, I'm interested. Or click on YouTube and type into the comment Python. If you are on Facebook, click below this video Python. If you are on Noster, click below this video. Maybe if you are on stream where I'm streaming on Noster, just click below this video and say Python, and then I will put the link in there, and then you will be notified whenever that program starts again. The program will start in February, but only the people in my VIP launches who raise their hands will get a notification, and that program will be sold out full pretty much fast. In that program, I'm going to talk with 50 people. We're going to guide you during 6 weeks to do that. So look at this. So imagine this, how we analyze this, like we are analyzing the world, etc. Imagine that we now want to analyze the USA economy. Okay, we can do that. Stay till the end, and I'm going to show you certain things, how I'm already building the database of the United States, building the Excel spreadsheet so that we can analyze them here, and then stay till the end, and then you will get the link again to go to raise your hand to participate in the 16-week experience and journey where we're going to dive into the economy of the United States and compare it also with the BRICS, etc. But we're going to dive into the economy of the United States, because you have to understand the economy by looking at the parameters to be able to understand what is going to happen in the world. I had a discussion with a great economist, a friend of mine, and she said, I believe that the United States will be forever, for the next 100 years, the global top, and that the United States dollar will be the reserve currency. We had a pretty much discussion, and then I showed her, we discussed basically that I believe in the United States, I believe in China, I believe in the figures, what's going on here. And Caribbean islands, stay put, because we're going after the G7, we're going to look at the Caribbean. So this is the G7, you see? And then when I click here on the G7, what you're going to see is this is the data again of the G7. All these beautiful Italy, total of the G7. Now, of course, now we're going to create a graph for G7. Boom. This code, basically it's creating a graph. I do not have to draw the graph in Excel because I want to be fast. Total BRICS, total G7 versus total BRICS. So this is G7, and I can see, okay, the G7 are more powerful. They are exporting more than the BRICS. Okay? Still, the core BRICS, the 9-1. But if we add this, probably all those other countries to the BRICS, which I'm going to do in a future episode, I'm going to update the list of the BRICS because I heard that Professor Dr. Richard Wolff, shout out to Professor Dr. Richard Wolff. He is from Democracy at Work, and he's teaching us about what is happening in the United States, and he's teaching us about capitalism. He's teaching us about the inequality in the United States. He's teaching us on how this can go down. Basically, he's analyzing the history of the United States, and he said that basically from 1970s onwards that there has been a huge inequality in the United States. The wage earners have seen their real wages going down or stable, while the wealthiest people in United States, the 3%, has seen their wealth going up. I can tell you that my wealth went up. I'm in the Caribbean. My wealth has definitely gone up the last 40 years. Definitely gone up. And I want your wealth also to go up. That's why I created Island Wealth Nations to discuss how we're going to create more wealth by diversification, etc. So this is the graph there. So I think the BRICS, the G7 is still stronger. Now, let's take a look at Russia versus Ukraine. You see that Russia was exporting much more than Ukraine, and this dip is the COVID, or probably also the war, of course, because these data are live data. Every time I put the new Excel spreadsheet in there with the latest data, you will see, boom, the graph is still 2024. So I have to create this framework once, this workbook once, where we have this code, and then every time there is a new Excel spreadsheet, I only put the Excel spreadsheet in here, boom, and the graphs will be dynamically updated. And I can walk through with my investors, with my policy advisors from small island nations, etc. So this is also for the people who are looking at this and say, Rooney, why are you showing this? I'm showing this to you because if you are an investor, if you are a high-paid employee, you have some savings, you know how Excel works, but you are in the Caribbean, you are on a policy department, you are maybe a secretary general or a director of the policy department. That's where the policy is made. That's where the analysis is done on small island nations. And then you can do this too, this type of analysis. If you are working on spreadsheets only, if you are looking for data, then you want to follow this show, check what we're doing here so that you can understand how it can be done. And we haven't even put artificial intelligence in there. But I can also put artificial intelligence in here. I can check DeepSeek, and I can link DeepSeek with this framework, and then you will see totally different information, because then I will have an artificial assistant, DeepSeek, looking at this. From the Caribbean, da-da-da, right here from Curacao, we're doing this. I enjoy this thing, and I enjoy loving working with other islands and with other investors, policy advisors, etc. Contact me if you want to learn more. So now I'm defining some Caribbean. Okay, this is not all the Caribbean islands, but you see here, if you are from Anguilla, Antigua and Barbuda, Aruba, hey people Aruba, shout out to Miss Dumfries, the Bahamas, Barbados, Bermuda, Curacao, Dominica, Dominican Republic, Grenada, Haiti, Jamaica. We have a Jamaican model. Let me just edit that, undo, because I've changed that. Otherwise, we will get an error. Jamaica, Montserrat, St. Martin, St. Kitts and Nevis, St. Lucia, St. Trinidad and Tobago, Cuba. 12 of these islands, we already have a framework that I showed you for Curacao. We have also this framework for them. Now, I created this framework so that I can spread the economic knowledge, decentralize the economic knowledge, because this knowledge is often within the central banks, within the Ministry of Economic Development. But it's now possible with macroeconomic models, with this framework. If you are an investor, a labor union, a pension fund, if you are a private investor, you care about this, you can get this knowledge too, because we decentralized it. I decentralized it. It runs on a spreadsheet. This can run on your computer, and now you can also do that. If you are a group of investors and you want private investors in the Caribbean, and you want to look at the stock market, we can do that. So now I define this Caribbean. Remember, this is not all the Caribbean, because Belize is not in here, for instance. But I just picked up the most of the islands in the Caribbean. And if I define the Caribbean, and I say, hey, create an exports of the Caribbean now, okay? Boom. Now I got all the Caribbean islands, and these are the islands, the exports now, the same as we created for G7, for the BRICS of the 9 countries, for United States. Now we have Caribbean. So if you want to analyze, for instance, how does your exports compare Barbados with Bermuda, we can use this. Dominica, we can use this. Good. Now let me check the Caribbean. Create a total. This is the total of the Caribbean. Total of the Caribbean. And now we're going to draw the Caribbean. Ta-da! Boom. Caribbean is about an export of, let's say, this Caribbean then is an export of, say, 6 billion. 6 billion they're exporting. 6 billion US dollars. Okay, that's great. 6 billion is a lot for these. This is mostly tourism. I think there's a great part, all those islands, Trinidad is oil, but all those islands are either tourism or agriculture. You don't have technology and manufacturing goods. You have a good grade, but they are not exporting these. These are services. You see, so this is the export. Now, I want to show you what we're going to do with the United States, and after this, stay with me, because after this you will see the USA data that I've collected already. So check this out. The exports, there is another part which is the imports, and the imports we already showed you in one of the episodes. Okay, so you see, to summarize it, you need to have data. Do not listen only what is told, what you see on CNN, on in the media, sometimes on YouTube. This is also right on YouTube, but don't believe things if you do not see the data. When you look at the data, you understand the patterns, you understand the graph, what's going on, and then you can make your own conclusions. Okay? So that's one of the most important things I can bring to you in this episode. So let me just give you, when you click on that link, let me see, when you click on that link that I just showed you, you will go to this website, and this website is easy. It's VIP launch, investment macro model, Founders Edition, and then what you need to do is put your name and your email in here, and then enter the VIP room, check your email, and then you will be in. You will be on a list, and I will receive your information. I will not spam you. You can always unsubscribe if you don't want. But if you are on that list, which I call the VIP, Very Important Persons Lounge, we're serving some cocktails in there, and I cannot tell you how the cocktails are, but it's going to be fun, and we might be doing something with all these people in the VIP launch. When you raise your hand, it means that Rooney from Island Wealth, I want to be interested. I want to be notified when this program opens. It doesn't mean you buy anything. You can always say, I don't want to see no offer, but you are amongst the top people, VIP people, that are going to do something about it, because you're going to get more information, get valuable information. And if you participate in this experience of 50 people all around the world, 50 people only, then there are only 50 spots, then that means that you are going to take care of your wealth. Good. So let me go now to the spreadsheet. What is the spreadsheet? I'm going to show you. I told you that there is a spreadsheet, and this spreadsheet window is of some data. So I've collected some data here, for instance, for you. So now in this session, I want to show you what I already collected for the economic model of the United States. Okay? So when you are participating in the VIP, you will learn more. When you are participating, if you say you want to participate in the 16-week experience, you will get more information, but I'm just giving you a teaser, an indication of what is in there. Good. Let's do this. If you have any questions, just ask. So this is the economy of the United States. This is focusing on the economy, not the exports that we just saw, but on the economy of the United States. It's called the gross domestic product. So if you have the gross domestic product, that means that you know exactly how big the economy is. And you can create a graph about the economy. Okay? We can import this data into our system that you just saw, and then we make a graph. Because we are not working only more with the graphs and making a graph out here of Excel. Yes, I will teach you how to do that during the experience, but we want to be fast. So when you are part of the experience, you will be seeing this data. I will be giving you the data, for instance. I will be giving you the framework, and then bam, you just get this data, and then you see the graphs, and you can analyze the graphs, because we can have a discussion around the graphs, what is happening in there. So what you see here are two tabs below. This is the quarterly data, just like we saw, we just saw with all the quarters, because those exports were from quarters, and this is the national account data from quarters. But let's look at the annual data, and you get annual. So look at this. So if I want to look at the United States economy, and I want to look at the economy since 1950, because we don't have data before that, then you see here what the United States economy was. Okay? 299. Probably that was 299 billion. It's not a trillion. But look at this. 50. So your grandfather, your father, if you are about 40, used to live in this United States. Now, what was the consumption? What was the consumption? Because the economy of the United States is driven by consumption, like I told you in one of the previous episodes. Now, here you see household consumption. So don't let anybody tell you that, okay, we are the greatest, we will be the greatest again. Just check your numbers to see if you are the greatest. Because really, in 1950, I can go and compare this with China, if we have the data of China. I can compare this with Russia, if we have the data. Probably we have the data. I have the data. With India. And then we can see how this whole thing developed. So I use this by looking at the indicators of the past, and then I make my conclusions. Okay, so the other thing is the investments. You see here the investments. So this is called gross capital formation. This is the investments. This is the investment to 62 billion in 1950. Because we have here million, and this is, if you take the indicator is a million, the scale. So this is in billion. 1,000 millions is a billion. So this is 62 billion. And then we can have, and we can check imports. So if Trump was living in 1950, he would have put import tariffs on these imports. Look at the tariffs. We had a previous discussion. These were the tariffs. This is the imports. Okay? So gross domestic product. The gross domestic product. Nominal. Gross domestic product here. This is another indicator. Okay? So this is current domestic currency, and this is domestic currency, and this is nominal, and this is the real. Okay, I always check the real, yeah, but this is, we have to analyze this, but I just want to show you this from the past, and then we move to the future. Look at how much information we have. Okay, look at how much information we had. So this is United States. Okay, you see the numbers are very, very big now. Here we are in the trillions. 22 trillion, because this is a billion, but this is a trillion. So gross domestic product, this is about 22 trillion. Okay, that's what this is about. But the depth is much higher. Okay, so this is United States. If you want to look at the quarterly data, much more, and you see the quarterly data is from 2018 onwards. We don't have that sales since 2015, but this is the quarterly data. If I get this data and I just get the latest data, I will get the data from 2022 till 2024, and then you will see the information, the latest information. Of course, during the experience, 60-week experience, we will be using the latest data, and we will be checking the quarters, and we will be uploading this information. So GDP components. But this is the national economy, and suppose we want to look now at the exports and the imports for the United States, right? We have this data, we can fill it in the economic model, and then we already start having a picture of the economy. So the mic, if you are on Nostr, if you are watching this on Nostr, check this out. Last time you zapped me. Thank you very much for your zaps. Zap is a money. Zap is just sats. Stats, 1 Bitcoin is 100 million sats. So for the people who doesn't understand what this is happening, you need to learn more about Bitcoin, because we're talking about money transfers. And on Nostr, if you go on Nostr, you're watching this from Zapstream, then you know what I'm talking about, because the mic zapped me. And I promised the mic that I'm going to show you how we create this macroeconomic model of the United States, and then the program will start, and we will focus with a group of 50 people. We will be diving more into detail of this, but I'm already giving this to you. So this is GDP. Remember, this is the economy. Now, if I want to go and check the other indicators, I'm going to show you USA, and then let's see the balance of payments. Let me see. USA. Let me see if I have the balance of payments. This is balance of payments indicators. No, let me see. USA government finance. Let me show you government finance. So now, if I want to dive into the government finance, so I want to know what is the government's revenues and expenditures. Why would I want to know that from the United States? Because I know that the United States has a huge deficit, and the deficit there is 1 trillion in interest payments. And the interest payments are higher than the payments on the military expenditures. Imagine that. In your interest payments, you have so much debt that your interest payments is 1 trillion. I don't know the percentage of the budget, but it must be high. And then you don't have money anymore to invest in education, in healthcare, in anything else, because you have such a high debt. Your debt to GDP, that means your debt divided by the gross domestic product we just saw, is 130%. Okay? So because I saw that the debt is about 22 trillion, then I can already calculate that. Let me take my calculator and I say 22 divided by 1.3. Let me see. 22 times 1.3. So your debt is probably about 28.6 trillion. 28.6 trillion your debt, and your income, your total economy is 22 trillion in 2022. That's you have it. There you have it. Because the debt situation, that means that a country which is huge debt, the households are loaded with credit cards. Then you want to understand how this whole thing is. You want to dive deeper. That's why we are using this government finance. Okay? So we can do the same thing with China and check it. Look at the data. Again, we go back and we see 1990 in this case. We don't have data from 1950. We are in the annual sheet and we start here with the data. Let's say from 2001 onwards, we get the data. So here you can verify for yourself if you are an investor, if you are a household, a mother, high-paid professional, low-paid professional, if you are working in Starbucks, if you are working in the fire departments, whatever. If you care about the future of your children, if you are in the Caribbean, you want to analyze the debt situation, because there are some people who don't believe that the United States might be in trouble. Look at the data. So here you see all the data, the revenues and expenditures. So look at this. Revenue. This is the revenue. This is the revenue situation. And I'm getting, this is the revenue situation. And then you get the taxes. This is the total revenue, the total taxes. Let me see. Let me see, let me make it a little bit bigger. And then you get the social contributions. Okay, expenditure. So this is the whole cash flow statement. This is the whole situation of the government. Okay? So if you wanna check that out, you can check that out right away. You can check that away right away. And then and then you can make your own decision. Okay? So consumption of fixed capital. What does it mean? That means like you are this is basically you are investing. Consumption of fixed capital. This is the interest. This is the subsidies. This is the goods and services. So you can do your own analysis. You have it again, quarterly. So this is a lot of data, quarterly. Same data, but now basically on a quarterly basis. And you have the monthly, even the monthly data. This is the same data on a monthly, but you don't see that data in here because that data doesn't exist. Good. So that is what you would like to check if you have the government information. We have interest rate. We have interest rate going a little bit fast, so you know exactly how the interest rate. So this, when I was analyzing this, I was just looking at the government bonds, and I look at the bonds, and you have also different other instruments. Lending rate. Look at this, 2%, 2%. Just check this, 2%, 4%. So the interest rates were very, very low, and then it went a little bit up. 69 went a little bit up, and then 70 interest rate, high interest rate, 6%. So if you want to check the interest rate compared to what it was historically, what did happen, what used to happen, then you can go and verify yourself. Don't say, hey, we have never had such low interest rates. If somebody tells you that, don't believe it. Just verify yourself based on the data. Look at this. This is very high. So 7%. Imagine you get a 7% interest rate. I know it has been being much higher. 9%, 11% in 1980s, 11% interest rate, 13%. Can you imagine that the interest rates went back to 13%? What will happen if Wall Street companies like Tesla, Nvidia, the artificial intelligence companies, companies that are loaded with debt, what will happen actually if this goes up to this amount? Now, the Federal Reserve, the Fed, the group of central banks in the United States who sets the monetary policy, they can, of course, influence the interest rate, and then everybody will follow that interest rate. But if there is a lot of debt, and if nobody is buying the debt, like China used to buy the debt of the United States, but if China doesn't buy the debt anymore, basically China dumps the treasury bills of the United States, then something can happen with the interest, because interest is the price of money. Interest is the price of money. That means that if the interest rates, if nobody is buying your bonds because you have a huge debt, then the Fed can do whatever it wants, but the interest rates, you need to increase the interest rates because nobody will lend you money anymore. Nobody will lend you money and the interest rates can go up, right? Because the people want a higher return on you lending you money. So that's when these things can happen. So look at this. Imagine the interest rates went to 13% like they did in 1982. How do I know it? Because I see it here in the data, and this data is from the International Monetary Fund. You see here? Boom. So this is just an historical analysis. Then the interest rate went down, and then around, there were periods where it was almost negative. Let's see if we can see it as negative. It doesn't need. It becomes like 0.989. So if the interest is close to zero, what you know already here is that, hey, there is plenty of money, fiat currency, basically in the system. And then there is so much that they can have the interest rate, basically you don't get anything. There is so much liquidity in the system, so much fiat currency, they printed so much currency that basically, hey, I can get money, I can get currency anywhere, so I'm not going to give you any interest rate. You see? So this tells you that there is too much liquidity in there. It almost became negative in certain parts. In the Netherlands it became negative. So if you have like money on the bank in the Netherlands, suddenly you have to pay the bank. So that's the interest rate. You see? So we are following these and we're just checking this. Let me see the I think we also had population or prices, production. Okay, this one was also interesting. So this is the prices. What are we? We are showing you how we collect data so that we can create the macroeconomic investment model of the United States. So let me just give you another thing for the last time before we go down, and I'm going to show you the labor market. The labor market is very interesting, but I'm going to show you the offer. Maybe you want to participate. To show you. This is very interesting because this is the labor market of the United States. Another sector. So we already checked the real sector with the economy. Then we went to the fiscal sector. We said, hey, this is the government expenditures, revenues, the debt situation. We already got that data. Then did we go to the export? No, we started with the exports of the United States, etc. But I can also show you here the data of the exports and the imports. Okay? And now we're going to the labor market, which is another sector. When you know about the labor market, basically you know about the employment, unemployment. So how many people are employed in the United States? Is it thousands, millions? How much? Has that been increasing, decreasing? How much is the economic activity? So that's what you see here. So again, we got data. Let's see how far this goes. Yes, it goes back to the 50s, right? And now we have here some indicators, and the indicators I'm interested in is in the prices, consumer prices. You see, CPI, consumer prices. This is important because this is telling you the inflation. This is a basket of goods, probably services also, that nobody actually buys, but the government, the Central Bureau of Statistics, produces this figure, and every policy, even the policy of the Federal Reserve, the central banks of the central banks, the central banks of banks in United States, they check this number to set their policy. Okay, we have oil production. Drill, baby, drill. All right, this is the unit. Drill, baby, drill. We have manufacturing production. We have industrial production. There is an index. We have labor market, the labor force. How many people are there? Thousands. And we have employment. The labor force is basically the employed and the unemployed together. And the employment is the number of jobs, people with full-time jobs. And unemployment is the people who are not unemployed. And this is the rate. So the rate on the unemployment is basically telling you the number of unemployed people divided by the labor force. Okay, so let's look at this figure. We are not going to look at the industrial because I can be checking the manufacturing sector. And is the manufacturing sector, out of this data, I can be checking, did the manufacturing sector in the United States, did it disappear? Was it going down? Was it bigger or lower? If we have the manufacturing sector here, we know basically what it has been doing since 1950. But I want to concentrate on the labor force, the people employed. So this is about, this is in thousands. So this 58 million. This is 58 million people in 1950. Okay. If we check the population, we can check that. And then 3 million of people unemployed. The unemployment rate, 5%. Okay. We go up. Now the unemployment rate went down here. So probably what happened, more jobs. This is more jobs. So very low unemployment rate here. And then we go to the number of jobs. So you see here. So if the unemployment rate goes down, most of the time, that is because the economy is growing. And then if it goes up, then the economy is contracting. I know this because when I put these things into a macroeconomic model framework, investment framework, you see all those things working with each other, all these indicators. Right now, we're just only looking at the indicators, but when you put it into a framework, you will see all these things working together and they are impacting each other. So it went from basically 50, the labor, the unemployed, the labor, the total people employed went from 62, employed was here, from 58 in 1950, and it went up, and then if you look at the data, 100 million, 99 million, so this is 1981 to 1982, you see a contraction in the unemployment, and you see a contraction in the employment. So it went from 100 million to 99 million. So I can already tell, without being the expert in the United States model economy, I can tell, hey, in 1982 there was a huge contraction of the economy, because you see that a lot of the employment decreased with about 1 million people, let's say, and then the unemployment increased with about 2 million people. So a lot of people in this year, a lot of people lost their jobs, and you see the unemployment rate went up. So this must have been worse contraction. So you see already there are periods in the American history where 1 million people lost their jobs. 1982. So America has not ever been the greatest and always been the greatest. There were periods where it was very, very difficult. We know if we look at the history. So I'm looking at the data and I'm making some conclusions. So you see here, the economy indeed was very resilient, because it went back from 9% of the unemployment, let's say 9.71, 9% in 82, and then it went back to 5% in 88. So what basically that tells you, that in 6 years there was economic growth and the labor force grew and more people got jobs, etc. So based on data, these are official data. So in 2008, let's look at 2008. In 2008, something happened again. You see here, unemployed, this was the global crisis, 2009. So you see here that basically the number of unemployed went in basically 2 years from 7 million to 14 million. This is horrible. This is an economy in contraction, deep recession, doubling of the unemployment. That is bad. This can happen again. This is basically 7 million people becoming unemployed in 2 years. This is bad. So what can this happen? Look at the episode before where I dove into the tariff, that if the United States puts tariffs on all the world, put tariffs on all those exports that we saw today of China, the BRICS, etc., then that means those exports are imports, part of it, to the United States. Look at the episodes that you see this can happen again. Okay? When we have the economic model of United States, it will be, my plan is to have a group of 50 people that are insiders. They are the founders of the macroeconomic model, and they will receive premium insights, etc. But my goal is to share this macroeconomic model, open source it to the community, because I'm a Bitcoiner and I love the open source community and I want to contribute. And maybe you can use the macroeconomic model of United States and combine it with the Bitcoin 24 model. And then that Bitcoin 24 model is open source, and it has given me already some insights, because I use that model to analyze what's going to happen, what potentially can happen. That's a very interesting model, because it's a model where you have 900 trillion of capital in it and data about that. So look at this. Basically, this is the labor market. All right, so that was it. I wanna go back to basically this intro. I want to thank you for today. Let me give you an applause for staying so long. Here is a bicycle horn that you stayed so long because you now know what can happen with data. We discussed today, we started by showing you an economic model. We showed you also how we get the data. We dove into the data of the exports. We compared it with the BRICS. We compared the BRICS with the G7, United States. We added 9 countries of the BRICS. We updated our framework. I showed you how this framework of automation works, where you can just easily import things. If you are interested in that and you want to learn that, also check my Python. Just put below Python and I will put the link in there. But this is not about that Python. This is about the offer I have, 16 weeks of building the macroeconomic investment model of the United States. And I showed you today exactly how I am collecting the data. So click on the link, come in the VIP room, and come inside so that we can serve you some cocktails and we can talk on the island wealth. It's not only island wealth, it's not only island wealth. If you're living on an island, if you have the island dream lifestyle in your mind, but you're living in the United States, in China, in one of the BRICS nations, you wanna raise your wealth. You know, if you are in the BRICS, you know that Caribbean wants to stretch their hand outside and touch your hands, shake your hands, because we know what you're building. We know the economies that you're building and we want to trade with you. Okay, so that's it. I'm going out right now because I want to leave you with the great lifestyle. Okay, so thank you very much. My name is Rooney Calmera. I am from the Island Wealth from Curacao. Again, 1.5 hours. It's long because I want to give you deep insight. This was episode number 3. There are another 2 episodes coming on. And these episodes are all about the BRICS versus the United States. So comment below. Give me some saps if you are on Noster. Share this with the world. If you don't like it, just tell me. If it is too long, tell me, but I will continue because this is my passion. My passion is to bring you island wealth. And check it out. Noster, LinkedIn, YouTube, Facebook. We're out. Thank you very much.